Join us on this broadcast in just a bit. We have Mr. Gaurang Shah of Geojit Financial Services joining us this morning to tell us what the market auction is all about. How is the markets trading this morning? Let's take this across to Gaurang then. Gaurang, if you can hear us, this is Krishna over here. Very good morning to you. Thank you so much for taking time out to join us here on News 9 Live. Lovely to have you over here on Daybreak. Morning programming here on News 9. Talk to us how the markets are faring this morning. Lots of big cues in terms of both, you have the RBI's Monetary Policy Committee review beginning today. You have the talks of US Fed rate hikes, earnings coming out. How do you rate the proceedings for the day?
Thank you, Krishna Kumar, for having me on the show, and morning to all of you. So I think after last week, a little bit deeper correction of close to about 3.5% on the Sensex and Nifty from the highs where we were, and to the lows of 19,300, a little bit below that. I think one should expect a little bit of stability this week, and that is what our view was yesterday when we put out our view for the week on the markets. Today, marginally down, a double-digit correction on both Sensex and Nifty. Nothing much to complain about. So I think we should possibly see a brief period of consolidation, though the volatility will be down, but there will be a little bit of choppiness depending upon, as you were rightly mentioning, there are numbers coming out. So you might have stock-specific moves coming through. But I think within this correction and consolidation that we are seeing, there are two things that we have advised our clients. One is to revisit your portfolios and get out all those underperformers or non-performers, and add to the strong names post the earnings and the management commentary as far as the business outlook is concerned. So this is one thing they should do. Secondly, if you are waiting for that correction to come in, then I think you should possibly start nibbling into some of the stock specific ideas, starting with banking and finance, then going on to FMCG, autos, some IT names, some pharma names, and some FMCG names. So I think these should be the broad 4-5 sectorial themes that you should follow.
Okay, I was just about to ask you something and you just gave me that as well. Many out there, people like us, retail investors specifically speaking, Indian investors out there are hoping for that correction that you are talking about because of all the run-up in the markets that we have seen, that we witnessed. Sensex now at that 66,000 mark, 65,900 right now. Nifty, with playing with that 19K mark. So many thought the markets were overheated. A couple of weeks ago, and they were saying that this is going to last, this entire rally. The month of July, for example, was a crazy rally. We are in August right now. Many still have at the back of their mind that there could possibly be a correction. That's when they can enter the markets or re-enter the markets. What would you have to say to all those people over there who are waiting for markets to correct so that they can enter it?
Well, firstly, I think the correction that we saw last week of close to, like I mentioned, 3.5%. was need of the hour because there were a lot of weak hands and leverage position that had come into the market. So with this correction, there is a little bit of cleansing, as we call it, that has happened to the market. Point number one. Point number two, I think waiting and timing the market is going to be an absolute waste of time, energy, and money. And you might not end up investing into the markets if you're really going to go and time the markets. So I think what we advise our clients is rather than timing the markets, take that opportunity of correction and at least start putting in 25-30% or a little bit more depending upon your risk appetite on these themes and the shopping list that you have possibly penciled down, and make a beginning. Because if you're going to wait out for that right time and right price, I think it's going to be a total waste of time and energy, like I mentioned. So make a beginning. Who knows? I mean, markets have corrected 3.5%. And honestly, Krishna Kumar, I was mentioning this to one of our interactions that we had even on yesterday, Monday morning, and last week. Right. That if people don't have the time to, or the capacity to digest 3.5 correction or 5% or a little bit more, then you should introspect whether you should come into the equity markets, and you should look at the levels where we were, not at the point-wise correction, but percentage-wise correction.
Fair enough. What I'm asking is, okay, that's for direct equity investors. What about people waiting to buy that SIP, start that SIP, or buy that mutual fund? Many waiting to put big blocks of money that they have in their fixed deposits into a mutual fund or a market-linked product. What about those people? What should they do?
So first of all, you should not stop your SIPs. If you are an SIP investor.
No, is it a good time to start a new one?
It is absolutely. Again, I'm trying to say the same thing, that don't try to, even your SIPs are related to equity market investments. Eventually, your money is going to go into equity markets via that XYZ fund that you had identified. So in an SIP, again, you are in for 3, 4, 5 years kind of time horizon. You should continue with that SIP, start an SIP. Like I mentioned, SIPs are small amounts that go every month out of your savings bank account into that particular fund that you identified. If you want to put a lump sum amount, again, like I mentioned, put 25-30% right now. As and when you get a little bit of more correction, you will get an opportunity. And in India, you have state elections for the remainder of this year. Next year, you have big election. There will be choppiness and volatility in the market. But the sad part of our democracy is that you have election every year round the corner in some part of our country, and these events keep on happening. So and we've seen a lot of those events in the past. Markets follow earnings, and index follow those earnings, and they reevaluate themselves at a higher level.
Gaurang Shah, they're telling us the intricate relationship between politics and economics and politics and markets. If I may, quickly taking our thoughts away to all the big earnings that I've been talking about, Gaurang. You have Hindalco coming in, you have Coal India coming in, and of course the big one, the Adani Ports and SEZ. As of 9:50 a.m., if you see two of these stocks are trading in the red. Coal India is up in the green. Your thoughts on these big earnings and what should people do with those stocks?
So on Adani, we don't cover any of the Adani group, but let me say this, post that entire episode of Hindenburg report coming out and the correction, I think I'll possibly leave it to the wisdom and fine sense of judgment of the investors. I can't comment directly because of the regulation issue. We don't cover Adani. But Coal India and Hindalco are the two companies that we have our coverage on. Coal India is very close to our target price. I hope the output and the quality improves over a period of time, and it has been improving for Coal India. And of course, the number as far as the realizations are concerned, as far as e-auction. So that's one particular aspect of Coal India. Hindalco, we are extremely positive on the entire metal pack, and Hindalco happens to be one stock wherein you've seen a little bit of lesser correction compared to the other metal entities. We have a buy coverage on Hindalco as well. Again, since the numbers are coming out, I don't want to jump the gun, but I hope they don't disappoint.
All right, hope those numbers, because these are big companies, and these are sectoral leaders in their packs, so to speak, and so we'll have to wait and watch on Coal India and Hindalco. Any other stock you think deserves attention for today's trading day per se?
So not a great advisor on trading, Krishna Kumar, but yeah, I mean, taking an opportunity.
No, stocks to watch, Gaurang. Not about trading. Stocks to watch for the day. Any big stock, even if you think an FMCG defensive kind of a stock is going to move for the day, tell us any tips that you can give us for the day, stocks to watch out for from your perspective.
I am always a believer of identifying or getting an opportunity, buying into or investing into stocks which have corrected. Okay. State Bank of India, for example, Krishna Kumar corrected on fallback of earnings.
Okay.
According to us, the number was quite good. I don't think there is any disappointment. I think the stock has corrected to 560 or 570 or thereabouts the last time that I saw. This is a great investment theme. If you're looking at buying into some of the public sector banks, then I think State Bank of India should be the name, and I don't think you will go wrong over there.
Okay, so that's SBI from the BFSI pack. Any particular, you've been talking about BFSI, IT, some of the themes that you think people should be investing in, isn't it? Any particular IT stocks?
So I would go, over here, Krishna Kumar, in the IT universe, mid-cap IT has performed quite well over a period of time when you compare it with the large, bigger boys, large caps in the IT universe. So I would go with this mid-cap name called Persistent Systems and LTI Mindtree. Both these names, of course, LTI is no more a mid-cap, it's become a larger entity. But Persistent System and LTI Mindtree would be the two recommendations on the fundamental side. Right,
Persistent Systems and LTI. Quickly moving on to the other big stock that has been in action since yesterday, in fact, because the news came out yesterday. Vijay Shekhar Sharma is now officially the biggest shareholder in Paytm, and that's because Antfin, which is a Netherlands-based investor, Vijay Shekhar Sharma is planning to buy over 13% of Antfin's stake in 197 Communications, the holding company of Paytm. With that, Ant Financial stake will be reduced to about 13.5%, and Vijay Shekhar Sharma's holding goes up 19.42%, making him the largest shareholders. It's going to be a non-cash deal that's going to take place. We saw a bit of a run-up in that stock yesterday, but the stock is trading down this morning. Gaurang, Paytm down this morning in the red.
So, yesterday we saw that bump up because of the news announcement of Mr. Vijay Shekhar Sharma buying into this particular stock. And we all know the very short-lived history of these unicorns, new age technologies, stocks, the way the valuation was, the way it got listed, and then we saw a downfall. As a disclosure, 197 Communication, that is Paytm, we do have a coverage over there. But the stock has run up to a great extent. So if you have bought it at lower level, you can continue to hold. I think this correction that you're seeing this morning, Krishna Kumar, is purely because of the news flow. And in the market, there's a good old saying, buy on news and sell on rumors. Buy on rumors and sell on news.
Buy on rumors, sell on news. Gaurang, stay with us. So we have my colleague and good friend Karthik Malhotra also now joining us in the studio. Karthik, thank you for taking time out this morning. Morning, good morning. So much talk around Paytm. Are you invested in Paytm? Any full disclosure?
I haven't invested in stocks ever directly. I've been covering stocks for a while, and it's always great to listen to our friends Gaurang and other market commentators, but I don't do stocks directly. But yeah, Paytm I think overall is a fairly interesting story. It is yet to turn profitable, and I think the talks in the street are that it is about to turn the corner. It is going to walk into that profitability lane very soon. But interestingly, Ant Financials, a Chinese investor, exiting part of its stake in Paytm, making Vijay Shekhar Sharma and his holding company the largest stakeholder, almost 20%. It's also a signal of Chinese companies not continuing to invest in India. Indian government would be happy that there is some sort of an exit of their investments in Indian startups. But overall, I don't know what mood and what precedent this sets. So maybe Gaurang can help us understand. Gaurang, Chinese investment firms not really wanting to continue to stay invested in India. I think at some level, of course, there is nationalism, there is jingoism in play, and we should be proud of the fact that we can raise our own money and we can buy back the stake that we perhaps deserve on our companies. But is it good economic sense to not let other companies invest in our startups?
So, there are a couple of things that have happened in the recent times, including some news items of how these Chinese companies operate in India. And I am, and I will always be a believer that we have our own set of graces to think, path out our growth trajectory, and perform. We don't need to live on borrowed graces, that is, borrowed brains. Unfortunately, we've been doing it for quite some time. I hope we grow out of that particular nutshell. Having said that, I think it is purely a question of credibility, ethics, compliance. And with the kind of recent news flows that we've been reading, it's rather disturbing. So I think it would be prudent to have lesser exposure or dominance of any Chinese entity or companies directly or indirectly getting into a larger kind of, or whatever percentage of stake would it be, in entities which are operating in very sensitive and a fragile environment. So I think, and of course, the government policies are also building up, which may possibly, throw in a little bit of more difficult times for any external, especially Chinese entities to come and play an active role over here.
Okay, right. And Gaurang, also PwC resigning from the board of Paytm Payments Bank. And of course, I mean, it's one of the subsidiaries of 197 Communication itself. But overall, with the Payments Bank license still not through, and the RBI telling Paytm Payments Bank to not onboard any new customers, what does this tell us largely about the overall payment banking system and the Paytm stock in particular?
So I think first of all, any kind of payment interface with this kind of a large presence, you need to have. And we did not anticipate that we could grow to this extent as far as payment interfaces are concerned. And we have absolutely done that, and we've set all sorts of record. And there are countries which want to come and possibly join the bandwagon that India has already boarded onto. But what we miss out over here is regulations and policies. I think that's where the government is now concentrating on. As far as the resignation of auditors are concerned, well, I don't have much knowledge or information on that. But if, I mean, and I hope that there are enough disclosures being made as to why the auditor had to possibly resign. What are those reasons, and what are those issues that made them to take this particular step? But more than that, I don't think I would be able to contribute. I hope there is clarity, and like I said, the government should make the entire environment so safe and fortress kind of an environment that it's very difficult to penetrate into this.
All right. Watching this conversation between you and Gaurang, I'm making an analogy. It's like, whether somebody should buy an MG car today in India or not.
Yeah,
It's the same analogy. Like, do you want to have exposure to a Chinese company? Because although MG Motors is Morrison Garage, a British company, British brand, it's owned by China's largest automobile maker, SAIC. So the same questions to anybody out there in the market to buy cars. Should you buy MG? Is the same debate that you have about investing in stocks with the exposure to China and a Chinese company. But anyways, to sort of keep this with the markets and with stocks and discussing it and taking it away a little bit away from Paytm to all the rate hike talk, Karthik. You have two kinds of rate hike talks that are happening. One is from the US, which is the US Fed hike. And then, of course, there is RBI's Monetary Policy Committee, RBI policy review that essentially kickstarts today. We will know 72 hours from now as to what the decision is, more than 72 hours from now, what the decision is from the RBI. Let's talk about this. Apart from earnings and policies, one big cue for the markets, for broader markets, is how rates are going to go. And we really thought we were at the end of that rate hike, madness in the US. Because inflation was sort of getting manageable. You're talking about a time the last hike could have been the last hike, but now US Fed's governor, Ms. Bauman, has clearly come out and said expect not one but multiple rate hikes going forward, and that's not good news, is it?
So, Krishna, I thought I understood macroeconomics and inflation and rate cycles fairly well. I'm left a little confused right now.
Okay.
In the US, you're dealing with high inflation. Core inflation, when you strip off volatile items like oil and food, core inflation is likely to stick around 4.7%, well above the threshold of the Fed at 2%. So a rate hike seems fairly obvious. Look at what is happening in China. Continued inflation and rate cuts to spur up investments, to spur up the loan cycle, to get the animal spirits of Chinese corporations back to take money from banks and invest back in creating jobs, etc. Look at Latin America. Brazil and Mexico are both cutting rates. India has been on a 3-month hiatus on any movement of rates. It's what the RBI refers to, Shaktikanta Das refers to as the hawkish pause. Now the problem actually emerges specifically now from reports which are coming in, and I'm specifically referring to the Deutsche Bank report of the Deutsche Bank Indian economists. And they're saying that food inflation in the month of July, and if you look at the three broad commodities in the food inflation basket of tomatoes, onions and potatoes, have gone up 87% month on month between the month of June and July. And that is likely to take headline inflation, not core inflation, which keeps the food prices aside, headline inflation for the month of July to perhaps as high as 6.7%. Now that report comes a day before the monetary policy meeting commences. So the point really is the RBI going to look at that one aberration in the month of July and sort of, use that as a benchmark to hike rates once again?
Right.
Or are we going to just let it sit through, breathe it out and hope that, it was one aberration, not likely to repeat? Because whatever, inference or whatever tinkering that happens by way of rates, it sort of results in inflation numbers only a month later.
Yep.
So I think RBI right now will
at least a month. It takes at least a month.
At least a month, right. So RBI has a very difficult job cut out right now.
Right.
When number one, US is likely to increase rates, and the FOMC has also been split on should it be 0.25%, should it be 0.5%. Some FOMC members also saying maybe a rate cut rather than a rate hike to spur up investments. Right. So RBI, Fed is most likely to increase rates. If Fed increases rates, the US bond market is likely to see inflows. That is going to have FDI outflows or FII outflows from India, net sellers.
Yes.
And if net sellers begin to happen, then what is more critical for the RBI? Inflation in election year or making sure that investments keep coming to India?
Oh, tough
so
balancing
I think
act.
Gaurang is going to have to come to
Toughest
our
balancing
rescue.
act. We'll break this story down, Karthik.
Yeah.
There is rate hikes expected from the US Fed, the US Central Bank. And then, of course, India is reconsidering rates in a monetary policy review simultaneously. Let's begin with the US Fed.
So India
Gaurang,
needs to tame inflation, hence rate hike seems logical.
Right.
But India wants to retain cash in India when US bond attracts money, and hence a pause or a rate cut might be in order. So, so it doesn't seem like a very obvious choice.
Right, not an obvious choice at all. Gaurang, we'll come to you with the first question. What are your thoughts on what you're hearing from US Fed Governor Michelle Bowman? Michelle Bowman making it clear that there will be multiple rate hikes. That's the commentary. Although the FOMC, the Federal Open Markets Committee, is supposedly split. Lots of commentary coming in from the US Fed. How do you think the Indian markets are interpreting the messages coming in from the US Fed?
So firstly, I think with the kind of multi-decade high inflation in US, undoubtedly they'll have to do out of the box thinking to possibly, bring down those high inflation levels at a very reasonable level, point number. And for that, I think you'll have to think out of the box. And that's what has been done. You may have to take certain hard, crucial decisions which you have not taken for last many years and decades, purely because of the kind of situation you are in. And the market, as far as our markets are concerned, and the globally, we were aware since the beginning of this year that in the US there is going to be issues with respect to inflation, and because of that, you might see rate hikes coming through. How soon and to what extent, that will totally depend upon what the numbers tell us as far as US inflation is concerned. Having said that, I think large part of this news is already there factored into the market. Possibly knee-jerk reaction could be felt over here like we saw last week with the decision that came through. But over here, I think from today up until 10th, that is day after, you will see the MPC meet. And on 10th, possibly you will see Governor Das coming out and telling us what the decision is. According to us, it's going to be a pause because 1 month uptick with respect to certain food stroke, vegetable stroke, agri-commodity related inflation may not possibly compel the MPC to decide on any rate hike. I think they'll possibly want to wait for some more time and see and possibly act accordingly. But on 10th, according to us, there's going to be a pause as far as RBI is concerned. Commentary is what we would be possibly eagerly wanting to listen into. But as far as US is concerned, I think they need to do a little bit more in terms of out-of-box thinking and to bring down the levels of inflation at a comfort zone wherein the world may not fear that.
Okay. So we can only hope that the better sense prevails in the US, so we can shift that discussion back to India right now. Different inflation problems that India has done remarkably well in terms of controlling inflation right through the pandemic and in the post-pandemic impact as well. And suddenly tomato prices go through the roof. Arhar, tur dal prices go through the roof. Food inflation, I mean, that's the one thing that's actually spoiling the entire efforts of India to keep inflation in controllable levels.
And my question really is, Krishna, that how much of food inflation or how much of oil inflation, and that is why core inflation strips off that data, how much of that can really be controlled by any sort of monetary tightening or loosening, as the case may be.
True.
So let's try and pull up the Thalinomics and see, what are the food prices that we are looking at.
Right.
And in fact, according to the same Deutsche Bank report that I was referring to, the three core products of tomatoes, of potatoes and onions have gone up as much as 87% month on month between the month of June and July. But let's just run through the data we have here, and this of course is on a year-to-year basis.
Right.
You mentioned tur dal, urad dal, I think the same thing.
Right.
Urad dal up about 1.7%, 1.7 times, I'm sorry, up about 1.7 times between last year and this year. That's almost double.
Right.
Arhar dal up about 20% between last year and this
Yes.
year. Ginger prices up about 20% between last year and this year.
Right.
Moong dal, another essential dal that goes into every average Indian's dietary requirements, is up about 60%. 1.6x is the price between last year and this year. Now let's look at the more critical. Tomatoes, I want to come towards the end, right? Tomatoes is something that we have done enough of. But rice, remember, we stopped banning, we put a ban on exporting non-basmati rice. So rice prices have actually between last year and June this year gone up 260%. 2.6x has been the kind of price rise we have seen on rice. Wheat, okay, not too much, just about 8% or so. Potato also just about 10%. But tomatoes up five times. 500%. I mean, what sort of a plate is this, and what does this tell us about the health
it didn't even leave ginger alone, Karthik. Ginger. This 1.2x, I'm actually doubtful, because there was a time in between when ginger prices were trading in multiples more than tomato.
Yeah.
I remember getting
I think you must be talking about July. These are June prices.
Correct.
So this is June to June last year to this
Yeah,
year.
if you check July prices, the transmission, you will know. Because I'm not kidding, 200 grams of ginger was for $250 or $300 or something like that, So no spice, no tomatoes, no tang. You have got to do, at the lowest is potato, which means add a little salt to that potato and get some arhar dal and add some turmeric to that, and that's all you can have.
Right.
But
this is all year to year. I'm saying tomato, potato and onion, not part of this thali, but onion together up almost 87% month on month, not year on year, between June and July. So the large question still is, I don't think with the, MPC also commencing today, going to continue for the next 72 hours or so, will it really be able to do anything at all to tame food inflation? Unfortunately, I think the answer is no.
Oh, difficult. Gaurang, that's a question that's not just for today, that's for eternity. How does a central bank, which is working so hard to keep inflation at manageable levels, lose it completely because of a factor of which it has no control over, like food inflation?
So that's where the government policies come into place, Krishna Kumar. The government has been focusing over the last many years and encouraging the farmers with new technologies and educating farmers how to get the best output and more output from their field, be it with respect to more crop per drop or be it with respect to utilization of urea and fertilizer. And fortunately, Krishna Kumar, in India, we have a land which is absolutely fertile. Unfortunately, we are extremely dependent on the monsoon season because of the fact that you have a population of 140 crores and large part of that population depends upon the agri activity. So we have to possibly, reinforce ourselves with respect to conserving water, rainwater harvest, and create more kind of reservoirs and educate our farmers not to leave the activity that they are into and come in search of labor job, etc. in metros and tier 2, tier 3 cities. I think if we are able to secure this particular, environment with relation to agri inflation, then we may be in a better place. But unfortunately, we have spent a lot of years not doing that. I hope that we'll possibly concentrate on this. But yeah, till that happens, we might have to fight this agri-food inflation to a great extent.
And do you expect this agri-food inflation trouble to affect the Indian economy for the next month or so? Because what we understand is that tomato shortage is not going to go away. Tomato sowing has been low. Urad dal, same problem. Not enough supply. That's the reason why these prices are going up. And you can't freshly sow tomatoes today to take away the lack of supply.
Yeah, what I heard on the street was that because the tomatoes are so expensive, people have switched on to curds. They are mixing curds with their dal, not the tomatoes, to get that sour taste. And this was on a lighter note. But yeah, I mean, it's very trouble. But remains to be seen, Krishna Kumar, as to how elevated the prices stay and whether the government, and like they possibly bring in a lot of restriction in terms of exports. We may have possibly a better situation. But till that time, I think it will be a struggle.
Oh, it's going to be a struggle. It's going to be a struggle to get that food inflation back. Gaurang, I want to thank you now for taking time out this morning and putting so many things into perspective. Straight from the markets have opened to the US Fed to RBI to tomatoes, helping us understand Thalinomics better. Gaurang, thank you so much for taking time out and hope to see you again here on Business Plus on News9 Live. Karthik, fascinating, isn't it? The fact of the matter is that we can keep talking. Tomato prices are not going to come down anytime soon. Ginger prices are not going to come down anytime soon. Food prices, thali prices are not going to come down. The only thought I have at this point in time as we discuss stocks and mutual funds is the people on right just above the poverty line or before who are going to be the most affected because the fact that their thali, they cannot complete their thali because it's so expensive. Here's hoping that, for their sake, there's more sanity in food prices and more sanity when it comes to bringing down food inflation. But I'm afraid we're going to move away from that. Any final thoughts on RBI per se?
Krishna, I feel, RBI is walking a very, very tight rope.
Yep.
Food inflation is something it can do little to nothing about, absolutely. But it's walking a very thin, fine rope, and it has to, and a tight rope at that, and it has to sort of, try and decide what is more important for India's overall economic growth.
Yep.
Do we need more capital inflow into India? And if that is the case, then perhaps keeping a pause on rates, or maybe taking that punt eventually of cutting rates, is something it'll have to do to attract capital coming into India. Or in election year is inflation, and I'm talking about core inflation here, not the food inflation, which actually impacts the Aam Aadmi, like you mentioned, the just about poverty line or getting into the above poverty line scenario. Food inflation is what bites them.
Right.
And food inflation is something that the monetary policy tightening cannot control. So should you try to hammer down headline inflation? Should you try to hammer down core inflation by increasing rates at the cost of foreign capital coming into India? So I think that is the tightrope that RBI has to walk in the next 3 days, and it has to decide, is it on the side of politics in election year, or is it on the side of long-term economic growth?
One hell of a juggling act that is going to be, as Gaurang was mentioning, all the state elections coming up and the build-up to that all-important central election. A lot will certainly play in the minds of those who are making policies, are deciding things for the country. But we will move on from here. Talking about people and country, we'll talk about another country away from India.
Bring it on.
So another country just next door, known to be, beating India in every single aspect of economic development for the last 3 decades, right? Looks like, that cycle is going in the reverse. We've been talking about that all-important China slowdown. The growth was not going to be the way it was over the last 2-3 decades. And here is a metric, a number that really puts how the last 2-3 decades were, and how probably the next 2-3 decades is going to be. Foreign investment in China, foreign players' investment in China is down at a 25-year low. Very telling statistic, isn't it, Karthik? We'll get our good friend Amit as well into the studio. Amit, why don't you join us? Karthik.
Hi, Amit, morning. Yeah, so
good morning.
That is one number that you mentioned,
yes.
Krishna. There are more numbers. Net exports from China are down about 14%. Net imports into China are down about 12%. We are broadly talking about a scenario where China is unable to trade with the world. China perhaps doesn't have enough orders to send out of its shores, and at the same time does not have enough demand from within its own consumers, its own population, its own citizens to be in a position to even import much. So overall, it is a bad situation for China, which is coming out, or has just barely come out 7-8 months into it, from the zero COVID policy, which was the most stringent lockdown across the world.
And so, Amit, was that the problem? Post that draconian zero COVID controls. I mean, China is already reaching the end of its peak. It looks like the draconian COVID control sort of hastened its end of its peak and its next cycle.
China is a first world economy. They are manufacturing driven.
Fair enough.
No, they are manufacturing driven. What I'm getting to is 14.5% down, small number. Imports down 12.4%, small number. FDI 25 years low, small number. FDI down to their reduced to 4.9 billion this quarter, small number. FDI is down 87% this year. That's a big number.
Wow, that is a big number. Foreign direct investment in China is down 87% this year as compared to last year.
As compared to last year. Another big number, the producer price index, what the selling prices the producers get for their goods and services, has been going down for 8 straight months. Manufacturing driven economy, inflation is down to 0. That's not a good thing. Textbook definitions of depreciation. Of depression, sorry, not depreciation, depression.
Okay, textbook definitely. I was, we're talking about inflation, but there are different kinds of inflation. There's stagflation, and etc., etc. You reach an economy. It's sort of the Japan syndrome, if I may. You've built your economy so big so quickly that now there is not that you can't expect the same kind of growth in that sense. Also, Amit, all of this is not just about the overall long-term cycles of China. It's also about geopolitics, isn't it? What's been playing out in terms of geopolitics since COVID?
I think there's a little bit of what they're doing wrong with themselves also. They were the suppliers, manufacturing suppliers to the whole world.
Yes.
Now, if their exports are down 4.5%, then there is everybody has been talking about disruption in supply chains.
Right.
But 8 straight months PPI is going down. That means they are still adamant about their strict non-COVID policies. Apple a factory saw close down for some time. So they're probably too arrogant or too stubborn about sticking to what they were doing and not trying to change things is what I'm worried about. It's good for India. Some of the manufacturing will come down, but in the meantime, the disruption in the manufacturing supply chain that it has caused is going to be bad for the whole world.
Right, and Karthik, that's a fair point, isn't it? It's all good to celebrate the downfall of China, being in India. It's a first world economy. You can't have a big economy turning sour, turning bad, because we're all connected in this world.
We are. So I think, Krishna, the problem really lies with the fact that when China went into zero COVID, the world did not have a choice. The world still had to consume. The world still needed those goods that were coming from China to now come from somewhere else. So the supply chains widened and they spread in other parts of the world to a point that the dependence on China got reduced for the whole world, not just India. For the whole world, the whole world was able to find suppliers outside of China because China's factories were all in lockdown. There was this syndrome of ghost factories. There was this syndrome where Chinese, in fact, there was this surge of grandparents in China, not the numbers, but the discovery of grandparents, because families had moved back to their villages, the native villages, and grandparents had seen grandchildren for the very first time, because China up until then was such a busy economy that there was no time for any family time per se. So all of that happened at a time when the world, in any case, needed certain goods to arrive at their doorsteps. And those goods arrived from places outside of China. So now that there is no dependence on China in the overall global economic environment that we find ourselves in, we have reached a point that that why should we deal with the arrogance of China? And for the Western world, the proximity and the sort of association China and Russia enjoy is a problem for the West. What happens on our borders with China is a problem for us sitting in India. So it is this arrogance, it is this socialism, it is this proximity to Russia, and it is China wanting to make the world believe that the world cannot function minus China is something which is going to bite China and is now starting to hurt. So we are in a situation where I think, China is likely to not see the kind of growth it has seen in the last 3 decades. And these numbers coming from China, incidentally, where China itself admitting that these numbers are low, means that the numbers could actually be a lot lower than what they are being projected as. Right.
Absolutely, couldn't agree more. Exports down, they say, is 14.5%, right? Foreign direct investment is down 87%. These are macro numbers, and let's remember, whenever we get macro numbers from China, it's the Chinese government's macro numbers.
It's the made in China
numbers.
It's
the made in China numbers, so to speak. And those numbers at this point, look at that. Exports tumbling by 14.5% in July. Imports falling by 12.4%. It's like a trade shutdown that's happening. They're neither exporting as much as they used to. They're not importing as much as they used to.
The rate cycles. What is China doing? And that is where, you've got to, despite China being an enemy, you've got to give it to their gumption. What is China doing right now? Dealing with high inflation, dealing with these very, very poor macro numbers, given its robust sort of, track record of decades. What is it doing? It's cutting interest rates. It's not hiking interest rates to tame inflation. It is cutting interest rates for manufacturing to become cheap, for credit offtake to take off, and for overall cost of capital to reduce, for China to continue gaining its competitive advantage to manufacture goods for the world. So the point is, it might lose business coming from India. It might have lost business coming from the US. What is stopping it from finding new partners that it can continue exporting to? So I think you cannot write off China just yet. China is a mammoth economy. It is a very dogged leadership which is not going to compromise on its own economic growth. So whatever it does, China is going to bounce back, whether we like it or not. China is going to bounce back. Now the point is, India needs to figure out a way to make its own market in absolute terms, not in comparative terms with China. Because when you keep comparing with China, any number that comes out of India against a slowing down China is going to look handsome. But we need those numbers to reflect in absolute glory and not in comparative glory with China.
Right. I was thinking, India's growth numbers should be better than a slowing China to start with. A slowing China has got some good numbers,
I think
overall
India
numbers.
needs to be very focused. If we need to grow at 7.6% to become the third largest economy of the world by 2030, then our target is 7.6%.
Yep.
Not 5% against China's 3%.
True.
We should not find our solace, our happiness against a slowing down China.
Because if you're
got to be
comparing
focused on
growth,
what we need.
Because if you're comparing growth rates, we should compare inflation rates as well. They have 0% inflation.
Exactly.
We should have 0% inflation. We don't have 0% inflation.
But for China, 0% is a bad thing.
True.
So because they are manufacturing driven, they have a huge consumer base. For those economies, inflation is a good thing. That means that people are not buying the goods they are manufacturing.
Yeah.
And they are not even exporting them because their exports are down.
Yeah.
So it may be a period phase, like Karthik was mentioning, they will bounce back. But they will have to do a lot more than just cutting down rates little bit. It's like reverse the US situation in China. While US is hiking rates to control inflation, these guys need to get inflation up. And
Right.
that is what is not happening right now.
Yeah. All right, fair enough. Getting inflation up is the challenge for China. The world goes one way, world has one kind of problem. China goes the other way, it has other kinds of problems over there. That's what's happening over here. India, US, every country in the world wants to badly tame inflation, especially post-COVID. Post-COVID, China comes out, the last to come out of COVID, technically speaking, turns around and says, whoa, we have to hike inflation, and cut rates over here. I mean, the idiosyncrasies of global economics. But moving on, you're talking about manufacturing. One way of making sure you pump up manufacturing in any country, in India, the US, China, anywhere, is to start making cars, man. Like, what are the best ways in which you have an economy, where you manufacture, so you're a manufacturing economy, and you manufacture something that every citizen wants to get their hands on, and that is cars. Cars sales numbers are usually seen as a metric of consumer confidence, in their own economy and their own ability to make money and save money and spend money. Can tell us something, apart from all the bad news we've been getting, US Fed wants to hike rates, RBI might not cut rates.
I'll start with reiterating something that Karthik said. Despite all the good news, 30% of auto parts imports are still happening from China in India.
Wow.
So I'll start from there.
Okay.
Auto parts will come later. Auto retail is up 10% year on year.
Okay.
Month on month, it is down 5% this last month because of a heavy rainfall. Three-wheelers did the maximum lifting in that growth number, 74%. Up two-wheelers 8%, passenger vehicles 4%, commercial vehicles 2%. I'll come to the specifics, all that is there. In passenger vehicles, Maruti was up 10%, Hyundai up 6%, Tata Motors up 6%. Two-wheelers, Hero was down 1%, Honda up 9%, TVS up 18%. Here is the kicker now, three-wheelers, Bajaj was 115% up last month. Commercial vehicles, Tata Motors was down 6%, Mahindra up 2%, Ashok Leyland up 2%. Most of them were up. So, good figures.
So commercial vehicles up, cars, four-wheelers up. The three-wheelers are the only, it's been a quantum jump. Karthik, does that, you think better growth in the rural economy, because three-wheelers are largely either they're autos in a city or they are, carrying goods and people in the rural economy?
Yeah, I think one could safely say that. But, three-wheelers growth is technically not an indication of either of the two, rural or urban, right? Urban economic growth is directly correlated with sale of four-wheeler passenger vehicles, as we call them. And bikes and two-wheelers are an indicator of rural economy to pick up, right? Unless, of course, we are talking about the Royal Enfields or the Harley Davidson.
Of course not.
Yeah, so per se, I think the matrix is very simple. Four-wheelers growth reflects growth in urban mobility, hence urban consumption. Two-wheeler growth in rural consumption. As long as both these numbers are up, we are talking about an overall good situation to be in from a national economic growth standpoint. Right. Three-wheelers, I think I'll have to look at the data to see were there some discounts going in the month of July. Is it seasonal because they have a certain life, right? So we'll have to look at that data to really be able to pinpoint exactly what three-wheeler sales indicate. Because these are not farm vehicles, right? I mean, if it is tractor sales or something, one is able to very directly associate that, okay, farm output is increasing, farmer income is increasing, it's good news.
I think we were talking about this subject a few days back. three-wheelers, electric vehicles also have seen big penetration.
Right.
So probably
that is because
has
the
added
whole
up to the
change
numbers.
in sort of, public mobility is shifting to electric vehicles. Whether you look at buses, I think if you look at buses, a similar data should emerge that electric buses would have sold in percentage terms more than regular diesel buses or CNG buses in percentage terms.
Right.
Maybe not absolute numbers.
Right.
I think that is something which should reflect even on three-wheelers, because that shift of electric mobility is happening quicker in modes of public transportation than private transportation. In fact, India has widened its gap of electric mobility as a ratio of or a proportion of conventional fuel as compared to Europe and rest of the world.
Absolutely. Just want to add one more thing. Now you have cab services coming in, which are purely electric vehicles,
Correct.
Yes.
who say that we offer you a cab which doesn't hurt the environment and gives you mobility at the same
That's
way.
right.
So that's the way forward, but I'm afraid we've completely run out of time here on this edition of Business Plus this Tuesday morning. Thank you, Karthik, and thank you, Amit, for joining us and taking time out. And with that, it's a wrap here from my side. This is Krishna Kumar signing off. Keep it with News 9 Live.
ChatGPT. It can generate codes and human-like responses through text, write stories, and do a lot more.
I work in a newsroom with anchors